Most traders believe the trade that changes everything is the one that makes the most money. That belief is usually what keeps them from ever finding it. The trade that changes everything is rarely the biggest win on the screen. It is rarely loud, rarely exciting, rarely the kind of trade you brag about. More often, it is the trade that teaches you something painful, clear, and permanent about yourself. Have you noticed that? Have you ever looked back at your trading and realized one moment split your journey in two, before you understood the market and after? Before you respected risk and after? Before you learned patience and after? That is the trade that changes everything. Not because of what it paid, because of what it revealed. Most people come into trading thinking the market is a puzzle to solve. They search for setups, indicators, patterns, secret confirmations. They believe the answer is out there somewhere, hidden in charts, hidden in timing, hidden in information. But what if the real answer is not out there? What if it is in here, in your reactions, in your impulses, in what you do when price moves against you, in what you do when profit appears quickly, in what happens when fear enters your chest and greed starts whispering in your ear? That is where trading is won or lost. The market has a strange way of exposing character. It does not care what you say your system is. It cares what you actually do under pressure, and pressure reveals truth. A trader says, "I cut losses quickly." Then a position goes red. He hesitates. He explains. He adjusts. He hopes. Now the small loss becomes a large loss. What changed? Not the market. The trader changed. Emotion took command, because created effect, and effect became consequence. This is why one trade can change everything, if you study it correctly. Let me explain. Imagine you wait patiently for a clean setup. The market aligns. Volume confirms. Structure makes sense. Risk is defined. You enter calmly. No force. No chasing. No prediction. Only preparation. Then the trade works. Not instantly. Not dramatically. But steadily. You follow your plan. You exit where logic says exit. You record it. Simple. Now ask yourself, what exactly made the trade successful? Was it luck? Maybe partly. Luck always has a seat at the table. But was that the real reason? Or was it patience before entry, discipline during the trade, clarity in execution, and emotional control when money was on the line? You see the difference. A great trade is not defined by profit. A great trade is defined by process. Profit is the byproduct. Process is the engine. Once you understand that, your eyes begin to change. You stop asking, "How much can I make?" and start asking, "Was this decision clean?" That question changes everything, because now you begin watching behavior, not just price behavior, but your own. You begin noticing patterns. You overtrade after a win because confidence quietly becomes carelessness. You revenge trade after a loss because frustration disguises itself as conviction. You enter early because waiting feels uncomfortable. You size too big because slow growth feels boring. Do you see how subtle it is? The market does not defeat most traders with complexity. It defeats them through temptation. Temptation to act when no action is needed. Temptation to hold when cutting is necessary. Temptation to believe certainty exists where probability is the only truth. And probability demands humility. The strongest traders understand this deeply. They do not force trades. They do not need constant action. They know opportunity is unevenly distributed. Hours may pass with nothing worth doing. And then one clear moment appears. One clean moment. One high, quality setup. One trade. And that one trade can carry the weight of 10 reckless ones. But only if you are ready for it. Only if your mind is quiet enough to recognize it. Only if your capital is protected enough to take it. Only if your ego is small enough to execute it without distortion. That is practical wisdom, not theory. So what should you look for? Look for clean structure, not clutter. Look for price behaving naturally, not violently and randomly. Look for confirmation, but do not drown in confirmation. Look for alignment between setup and context. And most importantly, look at your own state before entering. Are you calm? Are you objective? Or are you trying to make money quickly because something inside you feels urgent? That urgency is dangerous. Markets reward patience and punish emotional speed. Watch experienced traders closely, and you will notice something curious. They often look inactive. Why? Because they understand action is expensive. Every trade costs attention, emotional energy, and financial risk. So they become selective. Selection creates quality. Quality improves execution. Execution improves consistency. Consistency builds confidence. Confidence reduces emotional mistakes. And reduced mistakes create longevity. Again, cause and effect. Nothing random, nothing magical. Just disciplined chains of behavior producing disciplined outcomes. Now here is the deeper lesson most traders miss. One trade can change everything even if it loses. Surprised. A perfectly executed losing trade is more valuable than a badly executed winning one. Why? Because one teaches repeatable skill. The other teaches dangerous habits. A reckless winning trade can poison your thinking. It rewards bad behavior. It makes you believe impulse is intuition. It makes you trust chaos. That path ends badly. But a disciplined loss strengthens your foundation. It teaches acceptance. It teaches statistical thinking. It teaches that being wrong is normal, but being careless is optional. Can you separate losing money from making a mistake? Most cannot. That confusion keeps them trapped. Loss is part of business. Mistake is preventable. Know the difference, and your perspective sharpens. Then one day a trade appears and you see it differently. Not through greed, not through fear, but through understanding. You recognize behavior in price. You recognize behavior in yourself. You act with calm conviction. And whether that trade wins or loses, something inside you becomes clearer. You begin trusting discipline more than excitement. You begin trusting repetition more than prediction. You begin understanding that the market is not asking whether you can be brilliant. It is asking whether you can be steady, whether you can wait, whether you can think clearly when others are emotional, whether you can protect capital when nothing looks obvious, whether you can strike decisively when the moment finally arrives, and when that understanding settles in deeply, not intellectually, but practically, you stop chasing the trade that will make your account explode upward. Instead, you start building toward the trade that changes how you think forever, because once thinking changes, behavior changes. Once behavior changes, results begin changing quietly, and once results change quietly, confidence grows from evidence, not hope. That is when trading becomes less of a battle and more of a craft. A serious craft. A measured craft. Most traders spend years believing the market is something to conquer. They study charts endlessly. They search for cleaner entries, sharper signals, better timing. They think success is hidden somewhere in price action, waiting for the disciplined eye to uncover it. But what they eventually learn, usually through pain, is that the market is not simply revealing opportunity. It is revealing them. Have you ever noticed how two traders can look at the exact same chart at the exact same time and make completely different decisions? One waits. One rushes. One accepts risk. One avoids it. One exits calmly. One freezes. Why? The chart is the same. The market is the same. What changed was the person looking at it. Trading has a strange way of exposing what lies beneath the surface. It reveals impatience disguised as confidence. It reveals fear disguised as caution. It reveals greed disguised as ambition. Most importantly, it reveals whether your decisions are coming from clarity or from emotion quietly controlling your hand. That is why one trade can reveal more about you than 100 books ever could. A trader enters too early. Why? Not because the setup was strong, but because waiting felt uncomfortable. A trader refuses to cut a loss. Why? Not because the trade still makes sense, but because admitting error feels painful. A trader takes profit too quickly. Why? Not because the target was reached, but because fear of losing open profit becomes stronger than trust in the plan. Do you see it? The trade is rarely just a trade. It is behavior exposed under pressure. And pressure never creates character. It reveals it. That realization changes everything. Because once you understand this, you stop asking shallow questions like, which indicator works best? Or, what strategy makes the most money? Instead, you begin asking harder questions. Why do I hesitate? Why do I chase? Why do I break rules I created myself? Why do I become reckless after winning and desperate after losing? Those questions are uncomfortable. But hidden inside them is real progress. The market punishes blindness, especially blindness toward your own habits. If you are impulsive in life, you will likely be impulsive in trading. If you avoid difficult decisions, you will likely hold losing positions too long. If you seek constant excitement, you will overtrade. The screen magnifies who you already are. That is the revelation. And once you see it, you begin watching yourself with sharper awareness. You notice the urge to force a setup that is not there. You notice the quiet panic when price moves against you. You notice how ego wants to prove itself right instead of protecting capital. Awareness creates separation. Separation creates control. Control creates better decisions. And better decisions, repeated consistently, begin changing outcomes. Not overnight, quietly, steadily. The strongest traders are often not the smartest in the room. They are simply more honest with themselves. They know their weaknesses. They build rules around them. They respect their own psychological traps. If impatience is your weakness, your edge may be waiting longer than others can tolerate. If fear is your weakness, your growth may come from learning to trust defined risk. If ego is your weakness, your discipline may begin the moment you become comfortable being wrong. This is where real trading begins, not when you master charts, but when you begin mastering your reactions to charts. Because the market is always speaking, not just through price movement, but through what that movement pulls out of you. Fear, hope, arrogance, doubt, calm, discipline, conviction. Every trade reveals something. Every decision leaves evidence. Every mistake points toward a pattern. Most traders think money changes them. They imagine one big win will make them confident, sharp, and disciplined. They believe profit creates control. They believe a growing account automatically creates a better trader. But look closely, and you will see the opposite. Profit often exposes weakness before it rewards strength. Have you noticed how dangerous success can be when it comes too early? A trader catches a fast move. The market rums in his favor, money comes easily. Suddenly, patience feels unnecessary. Risk feels smaller than it is. Rules begin to feel optional. Confidence slowly turns into carelessness, and carelessness quietly turns into damage. What happened? Did profit improve him? No, it removed caution before discipline was built. That is why money alone changes very little. Discipline changes everything. Discipline is what keeps a winning trader from becoming reckless. Discipline is what keeps a losing trader from becoming emotional. Discipline is what allows clear thinking when price becomes noisy, when headlines create panic, when greed starts making bold promises. Without discipline, profit becomes fuel for bad habits. With discipline, even small gains become the foundation of lasting strength. The difference is enormous. One trader wins and increases size impulsively. Another trader wins and keeps position sizing consistent. One trader feels invincible after a streak. Another trader respects that probability can turn at any moment. One trader starts believing he controls the market. Another remembers he only controls his decisions. Who lasts longer? The answer is obvious. And yet most traders chase profit before building the behavior needed to handle it. That is backwards. Because discipline does something profit never can. It builds trust in yourself. Not false confidence. Real confidence. The kind that comes from knowing you followed your plan, respected your limits, and acted with clarity even under pressure. Can you sit on your hands when there is no setup? Can you take a small loss without trying to win it back immediately? Can you watch price run without you and still remain calm? Can you accept missing opportunity rather than forcing a bad entry? That is discipline. And discipline is expensive to build because it demands sacrifice. It asks you to give up excitement for consistency. It asks you to give up ego for objectivity. It asks you to choose process over quick reward. Most resist the trade. They want the reward without the restraint. But markets have a way of punishing impatience. A rushed entry becomes a weak position. A weak position creates emotional pressure. Emotional pressure creates bad decisions. Bad decisions create losses that were never necessary. Cause and effect. Always. Discipline interrupts the chain. You wait longer. You choose better. You risk less. You think clearer. And clarity changes execution. This is why disciplined traders often look boring from the outside. They pass on mediocre setups. They repeat simple routines. They protect capital like it matters deeply. Because it does. They understand that survival creates opportunity, and opportunity only matters if you are prepared to act on it. Profit is temporary. Some days it comes. Some days it leaves. Discipline stays. It keeps you grounded when money flows in. It keeps you stable when money flows out. It keeps your identity tied to decision quality, not daily results. That is powerful, because once your focus shifts from chasing profit to refining behavior, something changes inside your trading. You stop forcing action. You stop confusing movement with opportunity. You stop treating every chart like a chance to make money. You start seeing trades as decisions to evaluate, not bets to hope for. Most traders think transformation comes from learning more. Another strategy, another pattern, another indicator, another piece of market knowledge they believe will finally unlock consistency. They collect information, stack ideas, and keep searching for something outside themselves that will change their results. But real change in trading rarely comes from knowing more. It comes from one decision made differently. Have you ever noticed how small choices shape everything that follows? One moment of patience keeps you out of a weak trade. One act of discipline cuts a loss before it becomes damaging. One choice to stay flat protects capital during uncertainty. One decision to follow your plan, even when emotion resists, begins building trust in yourself. That is where a different trader is born. Not through a dramatic breakthrough, through a different response. The market constantly presents moments where instinct and discipline pull in opposite directions. Instinct says enter now before the move leaves without you. Discipline says wait for confirmation. Instinct says hold the loser, it might turn around. Discipline says exit when the reason for entry is gone. Instinct says double down and recover quickly. Discipline says reduce risk and think clearly. Which voice usually wins? That answer explains most trading results, because every outcome begins with a decision, and every decision reflects a habit of thought. An impulsive mind creates impulsive execution. A fearful mind creates hesitant execution. An arrogant mind creates reckless execution. A calm mind creates measured execution. The market is not simply reacting to your strategy. It is reacting to how you carry that strategy into pressure. That is why two traders can use the same setup and have completely different outcomes. One enters with patience. One chases. One sizes properly. One risks too much. One exits according to plan. One lets emotion rewrite the rules mid-trade. The setup may be identical. The decision-making is not. And decision-making is where careers are built or destroyed. Most traders wait for some future version of themselves to become disciplined. They think confidence will create better habits later. They think bigger profits will make them calmer. They think success will automatically shape stronger behavior, but behavior shapes success first, not the other way around. One disciplined decision creates evidence. Evidence builds confidence. Confidence strengthens control. Control improves consistency. Consistency changes results. Again, cause and effect. Simple, but not easy. So what decision changes a trader? Usually, it is the moment he stops negotiating with his own rules. The moment he cuts the loss exactly where he planned, even though hope begs him to wait. The moment he skips the setup that feels exciting but fails his criteria. The moment he accepts that not trading is sometimes the strongest position. The moment he understands protecting capital is not weakness, it is power. That one decision creates a new standard. Then another decision reinforces it. Then another. Over time, identity changes. You no longer see yourself as someone trying to get lucky in markets. You become someone who executes with intention. You become less reactive, less desperate, less emotional, more selective, more steady, more clear. Have you ever watched experienced traders operate? Their greatest strength is often not boldness, but restraint. They are not constantly proving themselves. They are not chasing every move. They understand that every decision carries weight, and because of that, they choose carefully. That care creates sharpness. Sharpness creates timing. Timing creates quality. Quality creates results. And all of it begins with a single choice made differently than before. One better decision can begin changing the trader you become. Then nothing looks the same again. Most traders are waiting for a special trade. The perfect setup, the dramatic breakout, the massive move that feels obvious in hindsight and life, changing in the moment. They imagine transformation arrives wrapped in excitement, in speed, in a trade so extraordinary that it instantly separates them from their past mistakes. But markets rarely work that way. The lesson that changes a trader often comes from an ordinary setup, a clean level, a simple entry, defined risk, nothing flashy, nothing that makes headlines, just a trade taken with patience, managed with discipline, and reviewed with honesty. And somehow, that quiet trade teaches more than 100 emotional ones. Why? Because ordinary trades remove distraction. When there is no excitement clouding judgment, you begin seeing what actually matters. You see your timing, you see your patience, or your lack of it. You see whether you follow your rules when nothing dramatic is happening. You see whether discipline is real or only something you talk about after the market closes. That is where the lesson lies. Have you noticed how traders often make their biggest mistakes in normal conditions? Not during chaos, not during historic moves. During quiet sessions, average setups, routine market behavior. Why? Because the ordinary feels harmless. That is where carelessness enters. A trader's size is too large because the setup looks easy. He enters early because price is close enough. He ignores confirmation because he has seen this pattern before. Small shortcuts begin quietly, then consequences arrive loudly. An unnecessary loss creates frustration. Frustration creates impulsive decisions. Impulsive decisions create larger mistakes. And what started as an ordinary setup becomes an expensive lesson. Cause and effect, always. But there is another side to this. The ordinary setup can also become the moment everything clicks. A trader waits instead of forcing entry. He lets price come to his level. He sizes correctly. He accepts the stop before entering. He exits according to plan, not according to emotion. The trade itself is average. The behavior is not. That is what makes the lesson powerful. For the first time he experiences what clean execution feels like. Not luck, not guessing, not adrenaline, just calm, measured decision-making. He sees how quiet discipline produces clear thinking, and clear thinking produces cleaner outcomes. Something shifts. He begins realizing success in trading is often built through ordinary moments, handled exceptionally well. That understanding is valuable because most traders are addicted to intensity. They mistake action for progress. They believe constant movement means opportunity. They chase volatility because stillness feels unproductive. But professionals understand something different. They understand repetition builds mastery. The same careful process, the same risk control, the same patience, the same emotional steadiness, again and again. Nothing glamorous, just consistent behavior applied in ordinary conditions until it becomes instinct. Have you ever asked why some traders look almost unimpressed by winning trades? Because they are not focused on excitement. They are focused on execution. A good trade is not special because it makes money. It is special because it reflects skill. That skill is built in the quiet moments, the routine setups, the average days, the trades nobody remembers except the trader who learned something lasting from them. And often, the biggest lesson comes from realizing the market was never asking you to find extraordinary opportunities. It was asking whether you could handle ordinary opportunities with extraordinary discipline. That is where everything starts changing, quietly, completely. Most traders think patience is simply waiting. Waiting for price to reach a level, waiting for confirmation, waiting for the right market conditions. On the surface, that sounds simple, but real patience in trading is far deeper than sitting still. It is restraint under temptation. It is clarity while noise surrounds you. It is discipline when every impulse inside you wants action. That is why patience is expensive. Have you ever watched the market move sharply without you and felt the urge to chase it? That feeling is where patience is tested. Your mind starts whispering dangerous things. You're missing out. This move is obvious. Get in now before it's too late. Suddenly, logic weakens. Rules become flexible. Emotion starts wearing the mask of opportunity, and traders confuse urgency with conviction. That mistake costs more than they realize. A rushed entry usually creates poor positioning. Poor positioning creates emotional discomfort. Emotional discomfort creates impulsive management. Impulsive management creates avoidable losses, because leads to effect every time. But patience interrupts that cycle before it begins. A patient trader watches the same move and remains steady. He understands that missing one opportunity is harmless, but forcing one bad trade can damage confidence, capital, and discipline. He knows markets will open again tomorrow. Another setup will come. Another opportunity will appear. That mindset is power. Because patience is not passive, it is active control. It is choosing not to act when action feels tempting. It is refusing mediocre setups, even when boredom starts creeping in. It is staying loyal to process when shortcuts seem easier. That kind of patience eventually pays in wisdom. Not just profit, wisdom. And wisdom changes how a trader sees the market. He stops viewing every candle as an invitation. He stops believing movement alone creates opportunity. He stops chasing excitement disguised as setup quality. Instead, he begins reading behavior more carefully. He watches how price approaches key levels. He notices whether momentum is building naturally or suddenly expanding from emotion. He studies volume, timing, and structure with calm attention instead of restless anticipation. He waits for alignment, and waiting sharpens judgment. Have you noticed how rushed traders often see setups everywhere? Everything looks tradable to an impatient eye. Every pullback looks like opportunity. Every breakout looks like confirmation. Every dip looks like value. But most of it is noise. Patience filters noise. Patience forces selectivity. Selectivity improves quality. Quality improves execution. Execution builds consistency. Again, cause and effect. This is why experienced traders often trade less, not more. They understand frequency is not the same as effectiveness. They know one clean trade can outperform 10 rushed decisions. They know capital preserved during weak opportunities becomes ammunition for strong opportunities later. That is wisdom earned through waiting. Usually, it comes after pain, after chasing moves that reverse, after forcing entries that never had edge, after learning that constant action creates constant vulnerability. Then something changes. The trader begins trusting patience more than instinct. He becomes comfortable watching without acting, comfortable letting trades go without regret, comfortable sitting in cash while others chase movement. That comfort is rare and valuable, because once patience becomes part of your nature, your decisions become calmer, your entries become cleaner, and your relationship with the market changes from restless pursuit into quiet observation, where you stop trying to make something happen and begin recognizing when something worth acting on is finally there, and that changes everything. Most traders believe their biggest enemy is the market. They blame volatility, manipulation, bad timing, unexpected news, or conditions that feel impossible to predict. They think losses come from outside forces, something beyond their control, something unfair, something they simply happen to be caught in. But if they look honestly, a different truth appears. The greatest damage often begins the moment emotion takes control. Have you ever entered a trade calmly, only to become a completely different person once money was at risk? At first, the plan is clear, entry is defined, risk is known, exit points are mapped out, everything feels logical. Then price moves, a little against you, and doubt appears. A little more, and fear enters. Now the mind changes its voice. It stops thinking objectively and starts reacting emotionally. Suddenly, what was once a disciplined plan becomes a negotiation with hope. I'll give it more room. It should bounce here. I can't close now. A small loss becomes a larger one, not because of the market, but because emotion quietly rewrote the rules. That is where control is lost, and it rarely stops there. One emotional loss creates frustration. Frustration creates urgency. Urgency creates revenge trading. Revenge trading creates poor entries. Poor entries create more losses. Then anger replaces reason completely. Cause and effect. The spiral becomes self-inflicted. But here is what separates strong traders from struggling ones. At some point, emotion loses its authority. Not because feelings disappear. They never do. Fear still appears. Greed still whispers. Doubt still visits. Excitement still rises after a win. Frustration still knocks after a loss. The difference is control. A disciplined trader feels emotion, but does not obey it. That is mastery. Have you noticed how dangerous emotion can be when it sounds convincing? Greed says, add more size. This setup is obvious. Fear says, take profit now before it disappears. Ego says, hold the loser. You can't be wrong. Frustration says, Take another trade immediately and recover. Each voice feels urgent. Each voice feels rational in the moment. And each one can quietly destroy discipline. That is why traders must learn to read themselves as carefully as they read charts. Watch your breathing before entry.